Welcome back. Today, we're going to dive into something really cool, candlestick patterns. And look, this isn't about memorizing a bunch of weird shapes. Nope. We're going to learn how to actually read the story the market is telling us. So, have you ever just stared at a price chart and it looks like a bunch of, well, confusing noise? I think we've all been there. But what if I told you that every single one of those little bars is a chapter in an epic story, a story about the constant battle between buyers and sellers? Stick with me, because by the end of this, you're going to be fluent. And hey, don't just take my word for it. The guy who basically brought candlestick charting to the Western world, Steve Nissen, he said it best. He said that each candle is this simple but incredibly powerful tool for getting inside the market's head, figuring out who's winning, who's losing, and maybe, just maybe, what's coming next. All right, so to master this new language, we've got to start with the absolute basics, right? The alphabet. And in our case, that's the anatomy of a single candlestick. It's actually super simple, but trust me, it is the key to unlocking everything else. Think of each candle like a little time capsule. For any period you choose, whether it's a day, an hour, or even a minute, it captures four super important pieces of information: the open, the high, the low, and the close. It's the whole story of that time, all packed into one powerful little shape. Now, the main event, the real juicy part, is the body of the candle. That's where the big fight happens. If you see a long body, that's like a knockout punch. It signals a decisive victory for either the buyers or the sellers. It shows there's some serious conviction in the market. And the color? That's your scoreboard. It tells you exactly who won that round. If you see a green candle, it means the price closed higher than where it started. That's a big win for the buyers. If you see a red candle, well, the price closed lower, a victory for the sellers. It's that simple. An instant snapshot of who's in control. Okay, but what about those thin lines sticking out? The wicks. Some people call them shadows. This is where you find the untold story, the almosts of the battle. A long wick on top, that means buyers tried to push the price way up, but sellers fought back and said, nope. A long wick on the bottom, same story, but reversed. Sellers tried to tank the price, and buyers came roaring back. Bottom line, wicks mean rejection. Okay, so we've got our alphabet down. Now it's time to start putting those letters together to form words, and even sentences. That's exactly what candlestick patterns are. They're the plot twists in our market story. They're the moments that signal a huge shift in momentum. First up, the engulfing pattern. And this one is dramatic. It's a total reversal of fortune. Just picture it. One candle completely swallowing the one before it. When a big green candle engulfs a small red one, that's a bullish engulfing. It's like the buyers just came in and completely took over. The bearish engulfing is the exact opposite, and just as powerful. Next, let's talk about the hammer and the shooting star. These are incredible stories of rejection. The hammer, it looks just like it sounds, usually shows up after prices have been falling. It's a sign that sellers tried to push things down, but buyers hammered back. The shooting star is its evil twin. It shows up after a big run-up and signals that sellers are starting to fight back hard. And then there's the doji, the one that looks like a plus sign or a cross. I like to think of this as the market just holding its breath. The open and close prices are almost exactly the same. It's a total stalemate. Neither the buyers nor the sellers can get the upper hand. And that indecision, it can be a huge clue that a trend is running out of gas. All right, so we can spot the patterns now. That's great, but honestly, that's only half the battle. And I'm about to tell you the single biggest mistake that almost everyone makes. They see a pattern and they jump on it without thinking about where it is. This next part, this is the master key. This is what separates the pros from the amateurs. I want you to burn this into your brain. A good pattern in a bad location is a bad trade. Period. You could see the most picture-perfect textbook hammer pattern, but if it's just floating in the middle of nowhere on your chart, it's meaningless. It's just noise. The real power, the magic, comes from its location. Here's a great way to think about it. Candlestick patterns are like traffic lights. A green light means go, right? But you wouldn't just slam on the gas if that green light was at the edge of a cliff, would you? Of course not. You check your surroundings first. Well, in trading, the surroundings are the overall market environment. So how do we figure out if we're at a good intersection and not the edge of a cliff? It really comes down to a simple 3-point checklist. First, location. Is this pattern happening at a super important level like support or resistance? Second, volume. Is there a big spike in trading activity to back it up? And third, confirmation. Does the very next candle agree with the signal? Okay, let's look at an example. See this hammer pattern right here? It looks great, doesn't it? Textbook. But look where it is. It's just floating around in the middle of the chart, in what we call no man's land. It's not near anything important. This is a classic trap. It means nothing. You just ignore it. Now, look at this. It's the exact same hammer pattern, but notice the difference? This one is forming right at a major support level, a price where buyers have stepped in before. See? The location changes everything. This isn't noise anymore. This is a powerful, high-probability signal. This is where the story gets really interesting. So we've come a long way, right? We started with the alphabet, the basic parts of a candle. Then we moved on to the plot twists, the patterns. And now we know the most important part, context. Let's put it all together and talk about strategy. This is more than just a playbook. It's a whole new mindset. Always remember, candlesticks tell the story of what people are thinking and feeling. Patterns are just the exciting plot twists in that story. But context is the master key that unlocks what it all really means. Your job isn't to be a pattern spotter. Your job is to be a storyteller, to read the entire story the market is telling you. So I'll leave you with this question. After everything we've talked about, are you going to keep just hunting for random patterns, or are you going to learn to read the market story? Because really, the choice is yours, and it makes all the difference.